MicroStrategy first buying Bitcoin. That seemed to be the catalyst last cycle. And you're seeing the same thing play out here. I know it's early, but that's why these stories are so important, because you get a sense of what's to come. The markets are reacting positively around the Trump news about how there might be a limitation in terms of what tariffs are actually placed on countries. And you can see the Dow, S&P, the NASDAQ, everything is up. And of course, that kind of news is trickling into the crypto markets as well. Bitcoin's up for now. Ethereum is up. But obviously on this channel and on this show, we like to focus on what's going on behind the scenes. And as always, joined by Mike. Together, we're Mick and Mike, and we're going to break down current news and as well as the 3 top projects that are currently getting funding. How you doing, Mike?
Good, man. Had a good weekend. Yeah. Are there going to be tariffs? Are there not going to be tariffs? Are there going to be some specific tariffs? Maybe now, next week, different in a couple of weeks, and maybe more in a couple of months. Who knows?
Which way did he go, George? And that's really what it feels like, right? It's the uncertainty is what is
not helping anyone.
It's not helping anyone, but it's also, we talked about this before. I feel like it's part of the process of what the current administration is trying to accomplish. Meanwhile, when you look at the industry, and you and I were at Digital Asset Summit last week, amazing things happening. And we're actually getting ready to dive into some of those projects that are securing more funding. So a ton of money coming into these early stage projects that are literally on the bleeding edge of the cryptocurrency industry. And these are areas that we need to pay attention to, because this is what sets the narratives, right? When the market does come back, and eventually things will come back. Eventually things will normalize. But in the meantime, Coinbase is making waves, Mike. It looks like they are near a multi-billion-dollar deal for Deribit. I mean, have you heard about this?
Yeah. And to be honest, not surprising, right? So a little bit of background is, Deribit is looking to be worth around 4 to 5 billion, and Coinbase is looking to acquire that. Deribit is a derivatives exchange, maybe the largest one. I'm not sure, but they did volume of 1.2 trillion last year, and I think we're going to see a lot more of these types of acquisitions. I think it was last week, Kraken bought NinjaTrader, which was a leading U.S. retail futures platform, 2+ million users for $1.5 billion. And, Kraken will have access to their U.S. crypto futures and derivatives market. I think with all the loosening regulations in the U.S., we're going to see a lot of the overseas exchanges have U.S. representation. And we're already kind of seeing the ones who already had U.S. representation, but maybe dormant a little bit, start bubbling up again, right? So a few weeks ago, Binance US started taking in deposits and withdrawals. And there are many other large overseas exchanges, centralized exchanges that are coming into the U.S. market. So we're going to see a lot, which I think is great, right? It's awesome to have a lot of choice. And so we're going to see the ones who are already here, like Coinbase and Kraken, try to protect their market share.
I've interviewed Patrick before. He does a lot of trading, and he's in a different part of the world, and he does CoinMStrategy. And this is something that is, I think, the underlying asset on margins, which is not something that is offered in the United States. And honestly, I don't know if it ever will be, but I like the fact that there are new financial instruments that are being introduced, and it's all because of regulatory clarity that's coming down the pike. So whether it be CoinM or other strategies, you like seeing that Coinbase is taking a very proactive approach in making sure that based on what the law is offering them, they're able to offer all solutions. So it's really good to see.
Yeah, but it's very interesting. Like for the first crypto ETFs, they were all futures ETFs. And then like for some reason, the spot ETFs were the ones that took a really long time, in the past, the SEC under the past administration. So that's kind of like a flip flop, right? Where there was a lot more spot trading here and now, in terms of centralized exchanges, and now they're all kind of gearing up for the futures trading because of those loosened regulations and the kind of expected move of overseas exchanges to come and try to gain market share in the U.S.
Now you have BlackRock that actually has to hold these assets. And so, of course, naturally, there's going to be a lot more red tape around that. And so, speaking of strategy, Mike, something else that's pretty big news, I would say, Michael Saylor, he is not slowing down. And so, Strategy, formerly known as MicroStrategy, issues 5 million share perpetual Strife preferred stock offering to fund more Bitcoin purchases. So we're talking about new financial instruments, and this is another one revolved around Bitcoin. And I'd love for you to kind of go into detail a little bit on what you think on this, but maybe I'm just a little bit paranoid, but I just feel like the more financial instruments you're offering, it just feels like a little bit of greed creeping in, and I'm just hoping we're not going to run into a Celsius type of moment here.
Yeah, I can't speak to the details of this instrument in particular, because there seems to be a lot of financial engineering going on where again, I don't know, in the past, more recently, you essentially, he sold stock to raise funds to buy Bitcoin, right? So you own the stock, and then, you kind of get this exposure to Bitcoin through the stock, which is in general pretty straightforward. Now you've got this perpetual Strife preferred stock where there's a dividend associated with it. There's like compounded dividends.
10% annual rate, Mike.
Yeah, 10% annual rate. And then there's like the compounded dividends. If, the dividends are not paid on time, then there's redemption rights to it. So like there's a lot of financial engineering going on where, you kind of have to, you kind of have to trust if you don't truly understand it, well, what's going on. And yes, it feels a little bit like a reach. Again, I don't want to throw around, terms, but like it kind of feels at least a little bit more House of Cardsy than it was when it was just a straight stock offering. But I think they kind of oversubscribed it. I think they initially planned to raise 500 mil, but there's strong investor demand. They increased the offer size of 722 is what they wound up as. So there's still this demand to the exposure with this, very new type of financial instrument. But yeah, it feels a little weird to me. At least it's just not as clean as it was with just a normal stock offering.
I'll be honest. A lot of times we're afraid of the things that we don't know, and I'm not
True.
enough of a financial expert to really understand the financial engineering. To your point, I'm just I've lived through the previous cycle, and I'm just a little bit paranoid. But these are the things that I feel I could potentially set up for catastrophic events if they don't go according to plan. If for whatever reason Bitcoin decides to plummet, how can you guarantee these returns? Again, a lot of things to unpack there, so I don't want to spread FUD, but just making an observation that you're starting to get into territory that may be a little bit more nuanced and complicated rather than, to your point, offering the stock.
Yeah.
Naturally.
I mean, if there's anyone in the audience who would want to come on and talk through the mechanics of this, we'd love to learn more about that. It just feels a little bit, unsteady, a little bit kind of unorthodox, and maybe it's just that we don't know how these mechanisms work, and we're just getting this kind of weird feeling about it. Something
else that is great news, honestly, is Tornado Cash is off of the sanctions list.
Yeah, and it goes to this argument of, is it the people who build the software, as a platform, are they responsible for what happens and how the software is used? You see that with social media on, it's just a platform, but if people say bad things on there, or misinformation, is the builder of that software responsible for that, whether it's, mediating or monitoring, and, similar application in this case. So a federal appeals court ruled that OFAC couldn't sanction Tornado Cash's smart contracts because they weren't property of any foreign state. It's open source software, right? So, who really owns it? So, this is a big win for privacy. I think a lot of us who are in the space, believe that pseudonymity on transactions, isn't enough. There should be tools to to maintain your transactional privacy. And this is a big this is a big win for that. These sanctions against Tornado Cash's founders are still being worked through. But regardless, this is definitely a big win for privacy, at least in the U.S.
The only, I guess, as I'm sitting here talking to you, Mike, the only uncertainty that I see around this, and this is me putting on my security hat, is when you have these exploits, large exploits, like what we've seen with Bybit, and you've got Lazarus Group still very active out there. How do you prevent them from being able to use Tornado Cash? You can't, right? Because that's the whole ethos of you being of it being decentralized and permissionless. But we haven't figured out what the solution is for a lot of these exploits yet. And how do you track the flow of funds past the Tornado Cash? Which my understanding is you can do it. It makes it a lot more complicated, but there are certain ways to do that. So I don't know if that played a role in the decision here, but regardless, I think this is just overall a step in the right direction in terms of allowing us to move forward with innovation.
Yeah, that is very much a security issue, right? Like you can't, you that's kind of a level above Tornado Cash, right? Tornado Cash is just the tool that's being used by these hackers to keep their privacy, and to not be able to get tracked. And yeah, that's certainly a problem. But it's like, I think we all agree that just you got to keep security top notch in your dApps, in your exchanges, and just have your head on the swivel. But yeah, it's a tough problem. Again, it's that kind of issue overall in crypto is like, it's such an open permissionless system that you're going to get the good with the bad. So it's certainly a tough problem to solve.
Meanwhile, projects are securing funding, and we're going to go over 3 projects today that have secured funding. And we're talking about 18 million, 24 million, 1.5 million. So some of these are securing more than others. A lot of it depends on the vertical that they're in, but nonetheless, interesting stuff. Let's start with Crossmint.
They've got a whole API platform for all these use cases. They raised a $24 million Series A led by Ribbit Capital, participation with Franklin Templeton, first round capital, Lightspeed, Faction, and Nika partners. So yes, they enable businesses to easily integrate blockchain functionality into their products. So that's like talking about wallet integration, tokenization, payments, on-ramps. So like they're targeting developers who are building these kind of institutional products, and being able to integrate blockchain into them. So these are a lot of these kind of Web 2, very large enterprises, Fortune 500. They've got 40,000 enterprises and developers, brands like Adidas, Red Bull, Microsoft, Telefonica. So global businesses that are looking to easily integrate blockchain into their products. So different user experiences, different business processes. So this is like what we're talking about with DAS, like institutions who are leveraging blockchain to make their businesses more efficient, to engage customers a bit more, and Crossmint makes it very easy for them to do this.
Sticking with the Digital Asset Summit theme, Mike, we're going to talk Utila, which is a institutional crypto wallet.
Yep. Utila, they raised 18 million in a Series A, led by Nika Partners, which also invested in Crossmint, Wing VC, NFX, Haymaker Ventures, and a few others. So Utila, it kind of, there's a little bit overlap in terms of like what Crossmint offers in terms of like wallets and other blockchain functionality and payments, but Utila is targeting more of these enterprises that perform on-chain operations. So it's like MPC-based key management, treasury management, trading ops, payments. So the customers are more like hedge funds, OTC desks, market makers, and so they're like powering a lot of the back end for that. So you're looking at the demand for stablecoin payments go through the roof. Everything at DAS was all about tokenization, treasury management. So all that stuff that's really growing fast, and Utila is like that kind of back end crypto wallet infrastructure that powers a lot of these operations.
Yeah, I'm definitely seeing a theme in terms of the companies that are currently getting the funding right now. a few weeks ago when we were doing this show, we were going over all of the catastrophe that was happening around meme coins. And now that the market calmed down, we're talking about, things that are happening on the institutional side. And usually, this is where it all starts. I mentioned this in previous episodes, like MicroStrategy first buying Bitcoin. That seemed to be the catalyst last cycle. And you're seeing the same thing play out here. I know it's early, but that's why these stories are so important, because you get a sense of what's to come. And we'll stick to the institutional theme for the next one here, Mike, is Aura Gold. And it looks like are they tokenizing real world assets, specifically gold in this case?
Yep, exactly. So they are tokenizing gold. They raised 1.5 mil, small compared to the others, but just getting started in a pre-seed round led by 468 Capital, and participation from Super Team, Fast, and some others. So yeah, they're tokenizing gold. There's fractional ownership, minimal fees, no storage costs. You can redeem as little as 1 gram of gold through their gold redemption network, or just get it delivered to your house. I think like at DAS, they talked about tokenizing all kinds of real world assets. I had some conversations with people at Ondo and some other real world asset providers, tokenization providers. And yeah, this is the real world, right? Like, this is gold. They're going to have it in treasury. I think this is kind of the start. A lot of people say like real world assets, like US dollar is a real world asset, bonds, stocks and all that. Like, I get that, but like, I kind of take it a little further and be like, real world asset is like a physical asset, right? And gold being one, something that's tangible, you can touch. So yeah, Oro is doing that. I think I saw like uranium was being tokenized. Obviously, real estate is one that's been talked about for a while. So, certainly we're seeing these these trends happening and happening fast now of getting real world assets on chain.
The commodities to me seems to be a little bit easier to tokenize, and you're also seeing like Emirates and BD. They're also tokenizing gold on Ripple. And so you're starting to hear these rumblings. Where it does get a little bit tricky is on the real estate side, because real estate is unique, right? One building is going to be different from another. And there are some platforms that are very interesting, like, for instance, Prop-Based. I've been following along what they're doing on Aptos. And they're primarily focused on the Asia region because, one, the adoption rate is high. They have like a 15% adoption rate in Thailand. Their real estate market is booming. And so, and the regulatory clarity, or I should say ease, is it's a lot more lenient there than it is in the United States. So we're not there yet with the real estate side, but it is one area that I think is very interesting to keep an eye on, because it's just a little bit more complicated. And so once we get the commodities on chain, the real estate, I have no doubt, is right behind.
Agree. Yep. And I think, like, look, to your point, of the movement from all the meme coin talk back to this institutional talk, like, there's just this big return to fundamentals that I love seeing. I just think that again, I think meme coins have their place. I think the pendulum just swung too far, and then now it's kind of starting to swing back, and we kind of just love seeing how some of the the largest financial institutions are getting involved, and not just from an assets point of view, but an actual technology point of view in making their businesses more efficient using blockchain.
Well, that about does it. We covered 3 projects. We went over some of the top news coming out. What's going on at Deep Ventures, Mike?
Yeah, we're cranking. We're looking at some great companies. I think it's always a great time to invest in early stage crypto projects. But particularly now, I think, like you said, there's real companies building real products. There's a little bit less of the kind of take advantage of a frothy market. And these are the founders that are they're going to usher in the next generation of users, and we're happy to be working with these founders.
And you and I will keep bringing the big stories and the early stage projects that are securing the funding and really making waves in the space. So for those that are watching, subscribe to the channel, like the video, share it with your friends so everybody can get educated on what's actually happening in the space, because there's a lot. All right, guys, till next time.